right, here we are. It is the afternoon session. We are going to do a little bit of day trading. And we're going to follow up on some of the things that we talked about last week. And I want to start right off from the very beginning and say, look, what we're going to do today is we're going to focus more on how to trade some of these settings, not so much on making money. Making money in this class is secondary. All right, I want to start that off. I got a whole bunch more comments in the comment section. Oh, I can't believe you trade like that. I'm here to teach you how the software works, how we can set up these strategies, what we're going to look for. We're going to practice in here. All right, our secondary model is to make money, but our first priority is to understand the software, the techniques, the strategies, all that kind of stuff. All right. So I'm not in here advocating that you bang the mouse like I do. In fact, I am advocating that you don't do that. You should be very careful about how often you click the mouse. I'm going to come in, I'm going to click the mouse a lot because we want to see how the software works. We want to see how the things function. We want to make sure that the settings are right. We're going to change the settings. We're going to adjust things. We're going to practice. That's what this is. This is a practice session on the tools and understanding the tools. All right, we're not here to make money. We're here to learn how these tools work so that we can then take them into our real money accounts and then be very careful, very judicious about how often we click the mouse. Notice up in the upper left-hand corner, account style, demo. Bottom left-hand right corner, demo. We are an education site. We are here to learn, all right? And what we're learning is we're learning how these strategies work and whether we think we can actually use them in a real market situation. So that disclaimer said, if you want to complain, go ahead. Complain in the in the comments again. But that's what we're doing here. That's what this class is all about. All right, come in here, and the first thing I want to do is I want to do a little technical analysis and analyze the markets because we're noticing that the market is starting to rally today. We're having a big rally. Now, remember, we are kind of anticipating that there's the possibility we could have this type of a pattern. And you'll notice that this market does rally up quite big with lots of topping tails and then flops back down, big lowering tails. So this could be that pattern right here. It doesn't mean that this market can't do any number of things, all right? Nobody knows what the market's going to do. It could take off and go to the moon, or it could flush and turn right around, come back down into this Fibonacci sweet spot. Now, the Fibonacci sweet spot is a probability statement. All right, when you draw a Fibonacci ruler in there, what we're doing is we're talking about a Fibonacci is a, let me see if I can get it to pull up here. Where is my, I thought I had it here for you. I do, it's right here. So it is a probability based on the cone of delta probability. All right, that's why we call it a probability. Delta cone of probability. Here's the slide for it right here. I've showed you this before. So this is the empirical data distribution rule. So AKA also known as the 68, 95, 99.7% rule, which means that the market has a tendency, it likes to hang out inside of this, the current price, it likes to hang out in that, that cone of probability 95.4% of the time. That's where it likes to hang out. It likes to go back to that region. And so that's what the Fibonacci ruler is. So when you draw a Fibonacci ruler over the top of the market, you are drawing this cone of probability. And the cone of probability says that that high cone is right there in the center between 38.6 and 61.8. That's why that is there. That's why I draw those little circles in there, because that's a high probability location. Does it mean the market has to stay there? No, it doesn't mean it has to go back in there. It's just a high probability point. If you go back and look at other places, if we come down here and say we just drop from this one here to here, you can see that this market came right back down into the Fibonacci sweet spot, just like a train on rails, all right? So that's the high probability location. If you come in here and draw another Fibonacci ruler, and you come in here and draw it in there, you'll see that the market came right back into that Fibonacci sweet spot here. And even on the downside, it came down, and then it started to hesitate in this region here, which is how we use Fibonacci projections, all right? this being a little bit beyond the scope of this class, but this is where all of these circles drawn in here, this is where this Fibonacci ruler is, and that's why the Fibonacci works, okay? That's why Fibonacci rulers work, is because they are that cone of probability, and what we're looking for is the market to return to its favorite spot, its little sweet, nice, warm place right there. 68.2% of the time data falls within one standard deviation of the mean. Around 95.4% of the data falls within two standard deviations. Nearly 99.7% of it falls within three standard deviations. So you can see it does not like to go out into those three standard deviations. All right, 95.4, it goes out to the 2, and 68.2, it leaves the standard deviation only 68.2% of the time. Less than half the time does it leave that little standard deviation. That's why this market loves to come back into that warm, snuggy little blanket right there in the center. Okay, it doesn't mean it can't go to the next one. We can't get another, cone of probability that's up here, and that's what we would look for based on the Fibonacci projections, and that's the possibility that we're always saying or anticipating, hey, there could be another Fibonacci projection up in here, and then we'd get another cone of probability, and this would be that center of that delta cone of probability up in there. All right, so that's how that works. So it's all based on probabilities. It has nothing to do with Lan Turner knowing what the market's going to do. I don't make any predictions on what the market's going to do. I just use probability projections. So now we're coming in here and we're going to drop down here too. We can look at a number of different markets. I've been practicing this, the tools that I wanted to show you today on the NASDAQ 15, and we did pretty good earlier. All right, so the tools worked like a charm earlier. Does it mean they're going to work right now? No, doesn't mean anything. All it means is I had good luck with them when I was practicing for this class and getting ready to show you a couple of tools I want to show you. And so we're going to come in here and I'm going to show you. These are tools that you can use if you would like. All right, I'm not saying that you have to. These are just a couple of just different tools that you can use in your trading if you want to. Okay. My goodness, I feel so nervous about saying anything anymore nowadays because there's so many people who are always coming down on me for teaching trading. I don't get it. It's just we're in here having fun trying to learn stuff. All right, if you don't want to learn stuff, go somewhere else. There's lots of guys that are professionals out there who they'll tell you they make millions of dollars every single day. You should go watch that guy because I'm not that guy. All right, I'm just playing with the software. I'm just some guy on YouTube who likes to play with software. Okay. Don't listen to me when it comes to trading. All I'm doing is showing you tools. I'm a tech support guy. All right. So don't get all nervous and get your panties in a wad and go down into the comments and start saying, you suck at trading. Why do you teach that? Okay. I suck at trading. Go be your own trader. Start your own YouTube channel. Okay, so anyway, back to what we're doing. I'm going to show you a couple of tools in Track and Trade. These are called the QOCO tools, and they take your stops, limits, and market orders, and they put them all together onto one ticket and put them into the market so that one will cancel the other. So the biggest problem that we have when we trade is that if we put on three orders, let's say, for example, we want to get into this market. Let's say we think it's going to fall, all right? It's turning red, so we're going to sell the market, and we're in the market, and we say, well, I want to put a stop up here, and we drop our stop, and we want to put a limit down here to take profits down here. Notice that those are not connected together. So if one gets hit, it doesn't automatically cancel the other, okay? So that is something that we want them to do because this is all one set of this is one strategy. So if it's set like that and it hits the stop, the limit is still there. So we would have to come in and manually replace that. By being able to use these QOCOs in the software, we're going to go ahead and hit exit chart. We're going to get out of here. And now if we use a QOCO, watch how I can come in here and I can go in, I can right click on the button and I can go down to add new QOCO preset. And in here, I can set up how I want those three QOCOs. So those, like we call them Q because it's quick. Q stands for quick. So it's OCO 1, 2, 3, and 4. And you have 4 buttons that are all programmable buttons. And you can set them up like this to make them do whatever you want. And I mean, there's 10 million combinations. So I've got, again, I'm one lesson ahead of you in the Sunday school manual. I'm reading it in church, and I'm going to tell you what I learned while I was sitting in Sunday school, all right? So don't take anything, I don't know anything. I'm just some dumb guy on YouTube. All I'm doing is showing you what I know about this software, okay? So you can come in here, and I set one up called Buy Red to Green ATR Stop 50 Limit. I'm going to come in here, and I'm going to show you that one. Okay, it's called Buy Red, and this is the one I want to show you today. and this is the buy button, and it said red to green. So all we're going to do is we're going to trade the red to green. Have you ever come here and watched these charts? The way I've got my chart set up is I like to set them up with range bar charts with Heikin-Ashi. Okay, range bar charts mean that there's no time involved. The bars themselves move 15 ticks, and then they have to have a new bar. But then I also put Heikin-Ashi over the top of them, which is a smoothing component. So you will see bars that are larger and bigger. And let me show you that in here too as well, because that's really fun. So I'll turn off Heikin-Ashi. And this is just a standard range bar 15 without Heikin-Ashi. So you can see that the bars are all 15 ticks big. That's every single one is 15 ticks. We don't know how long they're going to last because there's no time involved. The market just has to move 15 ticks, and then it will give you a new bar. Well, if you put on Heikin-Ashi and you smooth it, it gives you kind of this smoothing component to it. And so the bars do have some variation. Not a lot, but a little bit of variation. And so there's a mathematical model that's added to the bars themselves and it makes this smooth chart. And I like it. Some people don't like it. I like it. Okay? I'm not telling you what to do. I'm just telling you what I like to do. So as you come in here and you look at this, or as I come in here and I look at this, what I see is that markets have a tendency to move through green trends and red trends. And then I've laid over the top of it this tool called the ATR, which is just nothing more than the average true range. Now I put that pretty aggressive. I've got it at a 1 and a 6. So let me show you my settings in here. I've got it set to 1 and 0.6. So the stop factor is 0.6. And that just means that well, it's pretty aggressive, but it's set to be pretty aggressive because of the kind of bars I'm using with the range bars and the Heikin-Ashi settings. If you want to loosen those bars up, you can. You just kind of move that stop factor out, and it'll put the dots farther away. It's all up to you. And do I know the right answer? No, I don't know the right answer. I have no idea what is the best place to put this. I'm just telling you where I like to put it. I like to put it somewhere on the ATR period. I like that to be 1. And I like mine, the stop factor, to be 7 or even down as low as 6. I notice that if I go down to 5, it gets a little bit too aggressive. But if you're going to use 5, that's not so bad because that would be basically the same. If you look at it, it could be just like, one price bar back. And I like to do that sometimes too, where I like to put it into where my trailing stop is just 1 price bar back. So if you go really low on here, like down to 4 or 5, you'll notice on the stop factor that the little dots are basically 1 bar back. I like to go a little bit further back, give them a little bit of a movement, maybe 6, just to give me a little bit of a berth in there so I can see. But that's basically really tight, really close. And as long as the market's trending nicely, then that works well. If the market starts to go sideways, it gets chopped up a lot. So that kind of helps me know, too, not to trade, because if I'm getting chopped up a lot, well, I don't want to be trading. I only want to be trading a market that's making nice, swinging, sweeping trends and big, long moves like that. See this? This is what I'm looking for. I want to see this kind of thing right in here. And then once the market starts to do that, I'm happy because the market has a tendency to go through these little waves going from red to green and then has the little falling, trailing dots that I can trail my stop on. Now, sometimes the market comes in and you get stopped out because you got your stop too close. So you don't have to trail your stop that close. Once you get into the trade, you can hold your stop back and then just manually exit when it gets up there. But you might just accidentally manually exit right here anyway. So, I don't know. You have to get good at reading the charts and deciding when it's the right time to trade. You try not to trade through this time frames. And so when the market's doing this type of thing, stay away. Go eat some bacon sandwiches or something, egg sandwiches or whatever it is, depending on what time of day it is. I always go eat something. I don't know, maybe that's why I'm overweight, but there's lots of times when the market is not doing anything, and so I go eat something. So don't do what I do. Do what you do, okay? Go exercise. That's what you should do. Go for a bike ride. Don't go eat something. So this is what I look for. I like to see a market moving, and I wait for it to start moving first before I start to trade. Now, we have to realize the market will go, and it oftentimes will make these, what I've noticed is that the market has a tendency to make these types of moves, and then it'll kind of get choppy, and then it'll start making nice moves again, and then it'll get choppy, and then it makes nice moves again. Then it gets choppy. So right now, it's a little choppy in here. It's not really trending. It's not doing anything. The reason we're here at Power Hour, the last hour of the day, is because oftentimes you'll get nice trends in the last hour of the day, and the market will do some of these nice moves like that, and that's what we want to see. But where it's not doing anything right now, we just sit on our hands. But also, we're in a class. And we want to learn, and we want to see how the software works and functions. And if I'm just sitting here waiting for the perfect opportunity to trade and it doesn't come along, I can't teach you anything. I'd sit here for 45 minutes and not take a single trade. Well, that's no fun for you to come here and do that. That's why we're in a demo account, so we're going to trade anyway, all right? Even though it's not the best time to trade. So when you go down into your comment section, realize the reason I'm trading is because I want to teach you how the software works more so than try to make money. And so don't get all panties in a wad because I'm trading to when the market's not in the right perfect mode. Okay, we'll talk about the perfect mode too. We do that a lot too. So now we're going to come in and I'm going to show you the settings again in the trading tab, the QOCOs. Now I've got another set in here. Let me go through here one more time, pull this up. This is the one that I'm calling nope, that's not it. This is the one I'm calling the red to green. Buy red to green. We're just going to look at the red to green because you'll notice that when you get these little red to green moves, right? Sometimes these are good places to trade, and you can put in your orders and trail up. And if they make money, great. If they don't, you get out very quick and take a very small loss. And then you can come in here, and also one thing you can do on this is you notice you got a little button in here that says trail until break even. You can just have it trail until break even so it doesn't continue to trail up. So if it's a little bit, it's sketchy, it's kind of getting lots of little top bottoming tails, but yet it's still in an uptrend, you can turn that on, bring your stop to break even, or you can even tell it you don't want to trail at all. Just turn off the trail and just say, I want it to stop at 10, 12 points back and not trail at all. And, then you can trade through some of these less aggressive trends that are not trending quite so well. They're getting lots of little stop outs. Or you can even come in here, that's the great thing about it is you can do what you want. You can do what you like. And I'm just showing you how to do it, all right? So we're going to come in here, and what did I do? I just changed it. We're going to leave it on ATR, okay? And I'm not going to trail to break even. We're going to trail up on the break. We can always, look, I'll show you something that's cool too. You can say trail to break even, and then you can come in here, and I'll show you. We can go in here and buy this. Okay, so we just bought. Our trail is now on the little yellow dot, and it's going to trail up. And it's trailing to break even. If it goes to break even, I can always right-click on it, say Edit, turn off break even, say OK, and it'll start trailing on the ATR again and continue to trail. So that is kind of a neat little feature, too. You can always change things midstream. You don't have to stick with what it says. So now we got into the market. And the market's going to rally. We got this limit order up here. This is where we would take profits. And you notice I just set it out there at 50 points. Is that the right place for it to be? Is that going to be the best place? Is the guy in the comments going to get all nervous because I put my limit order out there at 50? No, it's just a placement that you can put it so that you can then notice how it's got a horizontal line across there. You can come down and you can drag it to wherever you want. You can say, oh, I want it to be on as we break above the previous high. I can bring it down there, and that line is lined up in there so I can see where that previous high is, and it tells me, hey, that's $70. So if it comes in here, I can move that to wherever I want. Oh, you want to have some moving averages? Oh, I like moving averages, and I can have those as projections, and I can put that on the moving average, whatever you want. You can do what you want. That's the neat thing about the software. That's the neat thing about trading. That's why we're all different, and that's why there's a market here, is because you can do what you want and make changes. All I'm doing is showing you some suggestions, showing you things I like to do. All right. So that limit's up there is getting ready to try and touch that previous high one more time. If it would go up there, that'd be great. We'd take our profits and we'd run away. If it doesn't, it comes back down here and touches my yellow dot. But sometimes I get all nervous. I'm like, I don't think it's going to go up there. If it breaks below that green dot, I'm going to hit exit chart because my stop's not a break even yet on that yellow dot. And if it falls below that green line, I start losing money. I might take it off myself by hitting that exit chart. Now, that's just something I might do. You might not want to do that yourself. It's just something I do. I'm a nervous Nilly. I was telling Bruce the other day. He said, where do you put your stops? I said, I put my stops in places where they're really super tight. But then if the market comes down and I start losing money, I get out anyway before it even hits my stop because I'm such a nervous Nilly. For me, it's either breakout or bailout. If that market doesn't immediately move in my favor, I just get right back out. I don't want to stay in there if the market's not moving in my favor. So now that market went up there and hit that limit order, as you can see. So now let's go in and show you the sell side. I'm going to bring this up, sell, and this is the sell side. So this is green to red. Notice this one is labeled red to green. And this one says it's an ATR stop. Let me put my little dash in there. ATR stop and a 50 limit, and then it trails on the ATR. So that's just a title up there that I put on there so that I can read it. But it's going to be sell market, and I make it my default so it stays stuck in there. And then I put my attached stop at 25. Why are you putting your stop so far back, Lan, at 25? Well, that's an adjustable number. You can change it depending on what market you're going to be on. Now, I'm on the NASDAQ 100 right now, and it's a range bar 15. So this attached stop works pretty good at 25 because it immediately will jump up to the yellow dot. As soon as there's a new yellow dot, it'll place the order and then jump to the yellow dot. The limit order is just out there at 50. Again, that's not anything magic. There's nothing magic about 25 and 50. It just happens to be that on this NASDAQ 100, that's where it seems to be a good place. Drop at 25 back and they'll jump to the little yellow dots. The little yellow dots, I've got them set at 1 and 6. Is that the perfect setting that's going to make everybody happy and rich, rich, rich beyond their wildest dreams? I don't know. Choose your own numbers. I'm just telling you what I like to do. All right. Then we're going to come down here and we're going to have a trailing on the ATR stop. So I have it on the trail to the ATR stop, and that's according to the stop itself. So the stop is going to drop at 25 back, and then it's going to jump to the ATR, and it's going to trail up on the little yellow dots. That's what I'm telling it. I can have it go to break even. I can not have it go break even. I don't have to have it trail if I don't want to. It'll just stay at 25. Of course, if you're going to drop it and not have it trail up on the dots, you might not want it to be 25 back. That might be a little bit far. So you don't want to adjust that. But then you can always right-click on it, tell it to trail in whatever way you want, auto trail. I'm going to set it to trail on the ATR, so it'll drop it at 25 and immediately jump to the ATR dot if it's closer. If the ATR is further away than 25, well, it'll wait for the ATR to catch up to it, and then it'll start trailing on the ATR. All right. So that's my settings. You can take your little camera phone, take a picture of that, put it into your software, and make adjustments how you like it. If you want it to be the limit order to be somewhere else other than 50, put it somewhere else other than 50. 50 is just a placeholder for me in here. All right, so 50 just drops it out there, and then I can drag it and put it wherever I want. The stop itself, though, that was programmed. If I want to change it, it'll pop up and it'll say, hey, are you sure you want to change that? I'm working with that. So what we've got here now is we're going from red to green. This is red to green. It's starting to go. We got the yellow dots in there. If I wanted to think that market was going to go higher, I just click that one button and everything's set. My limit order is set. My stop order is set. The stop will automatically trail. And then if it continues higher, it'll get stopped out up there at 250. If I want to move that to a different place, I just grab it and move it. Oh, I got stopped out. So red to green, red to green. So now I'm going to wait for that bar to finish. If that bar goes from green to red, we could click green to red. Okay. But of course, you want to make sure it's where you want to really get in. Do you really want to take a green to red? That's just a little pullback. It looks more like it wants to go red to green again and then continue an uptrend. Who knows? Nobody knows. So, there's a nice little spot where I went red, red, red. So we got green to red. We think it's going to continue to fall. Well, it doesn't look like it, so I'm not going to push the button. All right. That's the whole idea. It's your choice. Now we've got red to green, and it looks like it wants to rise again, or it actually looks like it just wants to go sideways, doesn't it? It doesn't look like it really wants to go anywhere. It just kind of wants to be stupid. If it starts to look like it's going to go, we can come in here, click our little button, and away we go. We got our order in there, and if it breaks out, and I usually, for me, I generally wait. I don't like to take the first breakout because that one doesn't generally work out very well for me. I'll wait and see if I can't get a better breakout. And then go. And sometimes I'll put in 1, 2, 3, 4. Sometimes I'll have more quantities over here. I might start with 3 or 2 or 1. And then if it starts to go and gets my stops moved into place, I can start adding more in. I just click that button again and it'll give me another one. See that? Now I'm in with 2. Click it again. Now I'm in with 3. Now I've got 3 limit orders up there, all with quantity 1, and I can move them around, put them where I want. The stops are all programmed to go in on that yellow dot. So as soon as I get a yellow dot, it's going to go to the yellow dot, and it's going to jump up. All 3 of those stop orders are going to be on the yellow dot. Now, I don't have to have all 3 stop orders on the yellow dot if I don't want to. I can right-click one and say Edit, and I can tell this one, hey, I want you to go on the blue lights. I haven't got the blue lights turned on, so let's say price bar's back. And I'm just going to go 1 price bar back. Say, okay. Now I got 1 that's going to trail 1 price bar back, and 2 of them that are going to trail on the yellow dot. You can do what you want. I can come in here with the other one. I can come in here edit that one, and I can come down and I can say trail. Oh, I want to trail. Well, I can't now because I just got stopped out. But I could go ticks back, or I could go dollars back, or I could go percent back. There's all kinds of things that you can trail on. I just kind of like those little yellow dots. They're kind of neat. They kind of work really well for me, and I like them. There's lots of different ways that you can do it, though. Whatever blows your skirt up, makes you happy, you guys do that. All right. So this is the NASDAQ 100. We're in the futures market, and so we're just kind of looking at the indexes. So we have no pattern day trading rules over here. So if you have anything, if you have less than $30,000, you can come in here and trade and not have to worry about your pattern day trading rules. So we come in here, let's go look at something else. This market's pretty dead. It's not moving anywhere, so we're not having any luck trading. So let's come and look at the Dow. The Dow looks like it's trying to move a little bit. Now we can use the same tools on the Dow. Let's come and see how they look. Let's say that, what do we think this market's going to break those yellow dots and come back down, or do we think it's going to continue to break higher and stay above the yellow dots? If we come in here with this one, let's see what happens if we drop that in there. Now, this is not as big a market. It's a range bar 25 on the Dow. I've got it set to range bar 25. Let's go ahead and pop one in there just to see what it does. Okay, so that is $250 on the Dow. It's up there. And we got our stop sitting on the blue light, or on the yellow dot, which is right there. So that on range bar 25 seems to work. Range bar 25 is kind of a long time. It's going to be a slow mover. You can see from this down here where it broke the yellow dot, that was at 11:21, and it's currently 1:19. So that was 11, 12, 1. That was a 2-hour move right there. So this might be a little slow, but it might be exactly what you want to do. Just because I put it on really fast ones, I do that so that we can have lots of action here on YouTube, so we're not sitting here for 2 hours looking for one trade to progress through. That might be exactly what you want to do. You might want to go to a range bar 25 and trade on a much slower time frame, slow things down, get a little bit longer trend, and trade that way. Perfectly fine. Nothing wrong with that. David Duty likes to trade on a range bar 50. Okay, those are really slow. They take a long time. You can stand a trade for all day long with range bar 50, and that's perfectly fine. Nothing wrong with that. Not very exciting. I can't come in here because I'm done now. Okay. This is exciting. All right. The point of me coming in here and teaching a lot of this stuff on these very short time frame charts is not necessarily for you to say, oh, I should go in and trade a range bar 6. I trade a range bar 6 because they move really fast and I can show you lots of stuff and we can make lots of trades. Okay. But are you going to go trade on a range bar 6? You might think that's fun too with real money. You might think it's fun to do with your demo account. But when you trade real money, you might want to slow things down, come down to a range bar 25. You can take bigger risks. The distance between your entry and your exit is going to be larger. You can see that where I'm at right now, my stop is sitting at $95. So where I'm at is a $95 on the stop. It might only be a $35 if I was down on a shorter time frame. So if I did something like a range bar 8 or a range bar 6, I might only be risking $25 or $30 as opposed to $95. So the market has a tendency to, it gives it a wider berth when you use larger chart time frames. And it's slower, slows things down. So now you're all set up. You got your OCO in here on a range bar 25 on the Dow. You can see how slow it's moving. It's moving in our favor. We're up $40. You can go down and eat some eggs or eat something else or go exercise. That's probably what you want to do. So go exercise. I go eat things. That's what I do. So now we're going to come in here. We'll just leave that one on there. Let's go over here to the range bar 15 on the NASDAQ. That's starting to move. We could come in here and stick one in there if we want to. We're on a smaller time frame. You get a little bit. There we go. So that jumped up in there. Now if the market goes, great. Oh, it's going to come back and stop us out. We're going to get stopped out with a small lot. Well, the NASDAQ's a bigger market. So even on a range bar 15, you're holding your stop back $80 on the range bar 15. If we were going to a range bar, let's go to range bar 50. It says you got an order going. Do you want to switch to range bar? Let's just open. Oh, I can't. Well, I don't know. I can just open range bar 50, but I'm still going to have my order on there. It's up there. Ooh, look at that bar. 50. That thing's gone way up in one bar on the range bar 50. So let's come in here and see if I was to the distance between, on a range bar 50, this is my stop, and that's where the market's currently trading. That's $695. That's why I don't trade range bar 50. That's a lot of money to me, and that's with a single contract. All right. So from where my stop would be on that yellow dot to where the market's currently trading, $695. Where if I go down to a smaller time frame, 15, you can see it breaks that one price bar up into a whole bunch of smaller time frame bars, and then I can have a tighter stop. So my stop's in this case $80 instead of $695. But there's more chance of me getting stopped out too, because smaller moves. So you have to kind of wait to see if you can't wait for markets to move. This is obviously not going anywhere. Let's go, if we look at Russell. Russell's not going anywhere either. Everything's dead today in the power hour, not having a lot of motion, a lot of movement here. Let's go into the S&P. Let's go down to range bar 25 on the S&P. Oh, it's getting a little bit of a rally out of there. We're breaking the blue lights. The blue lights are our Elliott wave patterns, right? So we get kind of the 3 times a charm. There's charm 1, charm 2, charm 3. Always easier to see in hindsight. So there's your charms, and then we get the first drive. So there's drive 1. Here's our counter trend coming in here on our probability statement, right? Accumulation distribution model. We talked about that last night in class. I'm teaching classes at the university, and we talked about accumulation distribution, Elliott wave theory, and Fibonacci theory. All right. And so I talked about going in and counting and measuring. We're going to do that on Wednesday night in class. We're going to go in and show you how to count and measure and do your accumulation distribution models on some stocks. And we're doing a little bit of day trading here today, showing you some strategies. The market's moving pretty slow. It's range bar 25. We can go down to range bar 6. And again, you might not want to go down to range bar 6 because that's pretty fast. Market's moving pretty quick. Might not be something you want to do. I'm not advocating that you do this. I'm not teaching you to do this. I'm just showing you stuff. All right? You have to decide for yourself what you want to do. Okay? There's lots of guys out there on YouTube that'll tell you exactly what you should do because they know. They know everything. So go watch that guy if you want somebody to tell you exactly what to do. All I'm going to do is show you a whole bunch of really cool tools. I'm going to teach you patterns, recurring patterns. You got to decide what exactly to do yourself, okay? I'm not going to tell you what exactly to do. It's not my job, not my role. Okay, so we're going to come in here and I can teach you all kinds of things. I'll teach you Elliott wave, I'll teach you Fibonacci, I'll teach you probabilities, I'll teach you how to count and measure the markets, I'll teach you what all these tools are. That's what I'm here for. So if you have questions, put them in the comments. Say, hey, Lan, what's that thing down there? That chalk and money flow. And I'll tell you what the chalk and money flow is. Hey, I don't know how that tool works. Show me how that tool works, and I'll show you how that tool works. All right. Then you're going to have to decide when to use that tool. I can give you some ideas. I can say, this is what it's going to tell you. And you might want to buy here, sell here, do this, do that. But you know what? Take it with a grain of salt. I'm just kind of just some guy on YouTube. I don't know anything. All right. So what are we looking at? We're trying to find something to get into. Even on a range bar 6, the S&P is moving like cold tar. All right, let me show you another tool then. Since we got these first tools down, this one here is your buy red to green, green to red. I was hoping the markets would move a little bit faster today than they are, but they're being a little bit slow and lazy here in power hour. Let me show you this other section I got in here. I've got in here, this is the QOCL3, and I've got it programmed to be our, and I tagged it as YT, so it's called YouTube. YouTube ATR, Scalp, Stop 8, Limit 4. So let's go ahead and look at the settings on that one. YouTube, ATR, Scalp, Stop 8, Limit 4. So we're going to put our Stop 8 and we're going to have a limit of 4. So we got a double risk to reward ratio, all right? So it's a stop. We're going to trail on the ATR for entry this time. So it's going to be an open stop for entry, and we're going to trail on the ATR for exit. So all we're going to do is look for a reversal of the market, okay? Now, I'm not advocating reversal trading, going up and down with every single arrow, although you can do that. I'm advocating that this is a place where we can say, well, the market's trending, and I think I'm going to try and catch the reversal. So this is with the scalp side, and notice it's trailing in with the ATR, it's trailing out with the ATR. So now we're going to come in and we're going to look at QOCL4, and it's the same thing. Same setup, only this time we're going to look for the reversal. Instead of just scalping out 4 ticks, we're going to go with we're going to set our limit at 25. Does that mean you're supposed to get out at 25? No. It means I'm going to drop it at 25 and I'm going to adjust it to my areas of support or resistance. And then I'm going to trail in on the ATR. I'm going to trail out on the ATR. So really simple, really fun little strategy. So I got everything turned off except for the ATR and the range bars and the Heikin-Ashi bars. So I'm just, again, going to try and capture a changeover from red to green or green to red, and this is how I'm going to do it. I'm going to come in here, and I'm going to trail on the yellow dots. Oh, that touched it. So there it is. Okay, it's going to trail. So I'm going to trail now with 2 of them. Notice that I've got 2 in here, and this is looking for a reversal, and it's an open stop order, which means there's no cost to doing it until it gets filled. And notice that it moves all by itself. It's trailing up behind the market. You're like, oh man, Lan, you're missing it. It's going. I know, but so I'm trailing up, and if it comes down and reverses and starts going the other way, this is going to capture the trend with 2 different orders, but I got 2 different limit orders. So it's on 2 separate tickets. One is going to have the limit order at 4, so it's going to take a quick scalp. The other one is going to stay in there longer and give you the trend. So this is called the scalp and trail, right? We talked about that before, but this is a scalp and trail based on the ATR. So it's going to drop our stop order at 8 points back. And that might be a little bit close for this range bar 15, but it gave us the red, and then it started to go green again. If we want to, if that closes green and stays green, we could just use this button and see if it's not going to go long again. What's it going to do? What's it going to do when it comes for you? We could also come in here and say, well, I'm going to just try it again with the dots. So this is just auto trailing on the dots for an intercept to the reversal of the dots. Okay, so if it turns and goes the other way, we'll go with the reversal, and it's a scalp and trail. So we'll take one off on scalp, and we're just doing 1 on each. So we'll be in with 2 contracts. We'll take one off at 4 ticks. We'll take the other one off, in this case, at 25 ticks. But once it's filled, we can grab that and put it anywhere we want. But right now, it's going to move up with the market. It's going to trail behind the market on those yellow dots. Wait for the reversal. So your timing is going to be very important. All right, when am I going to do this? Well, you're going to do it when you think the market's going to turn around and fall real hard. That's when you're going to do it. Oh, I don't know when it's going to do that. That's why it's called speculation. If I knew when it was going to do that every single time, I wouldn't be here teaching you. I'd be rich beyond my wildest dreams doing these strategies, right, all by myself. But I struggle with it sometimes too. I'm telling you, I like to do this stuff, but I'm here to teach you what I like to do. If you guys can find one that's perfect and works every single time, 100% of the time, I hope you'd call me and tell me. I'm just telling you stuff that you can do and try, things that I like, things that work good for me. All right, that market's still going up. Look, it went from red to green. If we'd have clicked our little red to green button right here when that thing closed out green, which I said we should do, but I didn't do, then we'd probably be making money right now. But I put in there the reversal. So we're looking for the reversal. Let's see if it won't come down and fall back down to maybe one of those moving averages. Okay. Oh, we got stopped out. I think we might have our, on this one, we're at range bar 15. I got it set at 8. So we're going to come in here and we're going to change that. All right. Oh, 8's a little bit too close. Let's come in here and change it to, it's a range bar 15. So each bar is 15. We could put it 1 bar back, but we could try 10 too. So we could come in here. We'll just change it to 10. What's the right answer, Lan? I don't know the right answer. Whatever's right for you, right? I don't know the right answer. That's why we're in this class. Try stuff. See what it does. Let's put it at 10. Maybe we'll have better luck. Of course, the market just turns right around and goes the other way. 8, you don't lose as much money. And if it turns green, if that bar closes green, look, we can just click this. Now we're in with green going along. We went from red to green. And then we think it's going to go along. It's already gone quite a ways. Drive 1, little drive 2. We're going into drive 3. Low probability of success. We could just bring this down and say, well, if it goes up and breaks a new high, we'll take our profits off at $50. Otherwise, we're going to get stopped out on when it turns around and comes back down. Try it. Try it. Lots of ways to trade. Try this one. If you don't like it, don't do it. If you don't like it, don't do it. Let's see if it'll go up there and give us $50. That's all. That's just a quick scalp. Come on, baby, go up there and touch that high. I didn't put it on the inside. I put it on the outside. If you don't want it to be filled, you put it on the outside. If you do want it to be filled, you should put it on the inside of. And I want that one to be filled. I should have had it down there. There we go. Now it filled. So now about $45, right? We got $245 open. Oh, we just got stopped out on that other position that we had. We just closed out that mini Dow position that was over here. It took our profits off at 250. Remember, we had our limit order out there at 250 on this Dow. So that one got taken off. We took our 250 profit. That's cool, right? That's pretty cool, right? This is a range bar 25. Doesn't move as fast, so you don't have as much whipsaw. Of course, look at this. It still had some breaking down in here. This was not a good trend. That was kind of a wimpy trend. Lots of topping tails, lots of bottoming tails. We like trends like this. With lots of flat tops, or this one here, lots of flat bottoms. Usually you get lots of flat bottoms. What I've noticed is you get lots of flat bottoms, then you'll get lots of topping bottoming tails. Then it'll start a new trend like this with flat bottoms. So as soon as you get to flat bottoms, that's a good place to start trading. Because we like flat bottoms and flat tops. We don't like the topping and bottoming tails. That's lots of indecision. So that one went up, made us some good money. So let's come back here and look at this one. So we're down. Let's come in here. We can say, well, do you think it's going to continue to fall? Let's watch this bar and see what happens. If it looks like it's going to go, you would get in there, because the closer to that yellow dot it is, the less risk you're taking. If it's going to go, but if it starts to go back against you, you're going to get stopped out and take another small loss. But if you can get in there, starts to go, you can put on a second one. Starts to go again, you can put on a third one. If you're happy, now you can start bringing these limits down and putting them on different areas of support. There's a moving average. There's a moving average. You can put it on. The moving average is clear down here. You can put this one way down here if you want. You got your trailing stops coming in, so now you're just looking for target areas to take profits at. So we just took one profit off at that. What was that? I think that's the 50. That was a 50 moving average. Now this one down here, this is a 100 moving average. It's moving a little bit, so we'll bring it up just inside of it. These 200s are down here. Let's see if it won't come down to those. We got the trailing stops. Trailing stops not even moved to break even yet, so I'll hover my mouse over the exit chart. If it goes up and says, hey, I'm going to go back up above your red line, I'll just hit exit chart before it takes any money away. I'd rather get out than lose a little bit of money. As soon as the yellow dot gets down underneath my red line, then I'm in the market, and my stop is at break even. Now, look, it's right at break even. I've noticed that when I get in, as soon as my stop gets to break even, that's about the distance the market likes to go before it turns around and comes back against me. And I think it does that because that's where a lot of people put their stops, right? Once it gets to break even, they get in right there, and then it pulls and draws the market back to them. And it likes to come in and stop everybody out. That's why I use limit orders down here and take profits while it's down there. Because sometimes it just turns right around, comes back, stops me out. I think a lot of people do that, so they get stopped out, draws the market back, right? Market makes money when it fills order, and if there's a whole bunch of trailing stop orders coming down, it's going to back up, go kill them. Go get them. Go get them. Now the question is, are they going to turn around and flush back down again, or is it going to continue to rally and go back up? Well, we don't know. It's probably going to go like this, but we don't know. If that turns red, there's a little yellow dot. If you put your order in there right now because you think it's going to go down, it's a smaller risk. If you wait for it to get way down here and put your stop in, well, then your dot's way back there. That's a bigger risk. But you're more likely to get stopped out if it's close, if you get in close to the yellow dot. But it's a smaller risk. Come on, baby. Okay, we'll come down here. If it comes down here and test that low, put it on the inside of the low so it can hit it. And then this one here is on this one here. We're only in with 2 right now. If we get a third one in there, we could put it way down here at the 200. You want to add one more? You want to add one more? We'll add one more. You can castle. I like to call it castling. So just as it goes to take this one out, I'll add one right back in again. So I have the same quantity, but I just take a profit. So now we added a third one. Oh, it's backing off against us. It's hitting that 50 moving average and saying, I don't want to help you make money, Lan. Okay, we're out then. I think it's going to go up, spike those yellow dots, and turn and fall again. Probably fall, but it probably won't go far. It's probably going to do one of these stupid things. Who knows? It could come in here and, or it could go, I have a Filipino wife. And you want to know a funny thing? While we're sitting here waiting for the market to do something, you and I take for granted noises that we make here in America, right? What if I say something like, I didn't say anything. I just made noises. What does that mean to you guys? Does it mean anything? What if I did this? What does that mean? I have a real hard time. I can't do that with my Filipino wife. It doesn't mean anything to her. If she goes, Lan, would you like dinner tonight? And I go, and she turned and went in the bedroom. I was like, wait, where's my dinner? Where's my dinner? You said, I don't know what that means. I guess I thought it meant no. Just some interesting things that you run into when you have somebody who English second language. Can't do that. That doesn't work very well. Where's my dinner? Did you guys ever see that movie? Where they had black and white and then they went color? That was a funny movie. Where's my dinner? All right, we're spiking the yellow dot. We're not breaking through it. We're spiking it. If it spikes it and comes back down and starts to fall, that's a good sell signal. Right there. Let's take a short. I don't know if it's going to go down, but it's a sell signal. Doesn't mean it's a very strong one. It just is one. You notice that the market likes to spike those yellow dots and then turn and fall. How far is it going to fall? I don't know. I have no idea how far it's going to fall. Don't ask me. I just put these places in there. So there's this little line on the screen. Maybe it'll fall down to that. I don't know. Why would it fall down there? Well, because it's a 100-period moving average, and lots of people think the markets have a tendency to fall down to 100-period moving averages. Oh, we guess it got spiked out again. So this market just keeps spiking. It's not going anywhere. It's stuck on that 50 moving average. So technically, you should stop trading. Don't trade when it does that because it's not going anywhere. Wait for it to start going somewhere first and then start to trade. But I'm trading over trading. I'm way over trading, all right? But it's because we're in this class, and I want to show you, and we're in a demo account. We want to see how things work. And it's one of the things we do here is we learn what not to do. One of the things not to do is to overtrade. Don't overtrade. Wait till you get the perfect setup, take one trade, and then be done for the day. So there you go. There's my wise advice. Only take one trade a day and walk away. Don't come in here and trade like I do because I'm just showing you the tools. We're just playing. We're having action. We're in a class. We're trying to have fun. We're learning about the tools, learning how the software works, jumping around, looking at different markets. All right. Well, none of the markets are really very active. This is range bar 25 on the Dow, which is really slow. Let's bring that down to range bar 15. That's what it looks like on a range bar 15. Wow, I got my chart preferences. Let's turn that up. Bring up to, looks like about, I'm going to put it on 20. Still pretty close, but that's all right. All right, that market's getting ready to rock and roll. Broke across that previous trend like that little wedge or triangle formation. Question is, it's already popped out and broke the previous high. Do we want to stay? We want to get in there, or we want to wait and see if it's going to pull back? It might pull back and then go again. If I get in up there, I got a chance of it pulling back against me. My stop would be way back here on the yellow dot. That's a long ways back there. $200. Don't really want to be getting. Look at it go though. What's the other markets doing? We're gonna get a NASDAQ gonna follow. That Dow's taking off to the moon. NASDAQ's gonna follow. Let's give it a shot. Let's go in there. Let's put a couple of them in there. Let's put in 3. You get 3? Go one more. Let's see if we can't get one in there. If it comes up and tests that high, we'll take one off up there. We'll let the other 2 run. See how far it wants to go. If it turns around and comes right back down, we'll get stopped out. There's an arrow. Just trade the arrows, Lan. Just trade the arrows. Okay, we'll do that then. Come on, baby. Come on. Don't let the Dow beat you. Don't let the Dow beat you. Look the Dow. Come on. Keep a little momentum going in there. Look, we're going to get stopped out again. This rotten market. You rotten thing. Some days we have lots of good luck. Some days not so much. If you want more staying power, and you don't want, oh my gosh, look at that thing. Now it's getting a little crazy. Oh, that was our 10-minute bell. We know better than to be in the market on the 10-minute bell. What the heck were we doing getting in the market on the 10-minute bell? Don't ever be in the market on the 10-minute bell. That's a lousy time to be in the market. That's where I think they shut off all the quant systems and they go a little bit crazy. Okay. We want to take a little short position here. There's the yellow dot. That's where your stop would be. If it falls, then it's a very small risk. Nope, now it's going up. We're going from red to green, red to green. So we'll do a buy here. Wait for the green little bar to close out. Might not end up green. Might turn around and come back down and still be red. Oh, it's green, but it's below the yellow dots. Wait for it to go up and stay above the yellow dots and be green. It's green, but it didn't really close above the yellow dot. It closed right on the yellow dot. Oh, now it's coming back down. Oh, come on, rotten little thing. Close above the yellow dots. Green above the red yellow dots. Close above the yellow dots. Up there, nice and high. Come on, come on, come on. How's the sound today? I had somebody saying, I think it was it Kirk? Was it you or Bruce? One of you was saying that my audio wasn't very good on the other day, and they gave me a new version of the software, and I've been having some technical difficulties with it. I don't know. Hopefully the sound is better today. Look at this dead market. Completely dead. He's going to try and fall. He's trying to break below that 50 moving average. Kirk says the audio is muffled. Audio is muffled. I don't know why the audio would be muffled. Bruce says audio's good today. Kirk, your audio's muffled. I don't know what's going on. I don't know what to do. I don't know what to do. Maybe I'll try my headset again instead of this fancy little dynamic microphone. All right, there we go. Let's see if we can. We got a green bar closed above the yellow dot. I clicked one in. Let's see. It's just a single. Let's see what happens. See if it wants to go. It's trying to take the first breakout, which I always say don't try and take the first breakout, but I did anyway. Am I telling you you should do it? No. Am I telling you not to do it? No. I'm just telling you I've never had good luck taking the first breakouts because there's lots of them. But this one closed above the yellow dots, and the yellow dots were very close, so it wasn't a big risk. So I took the risk, and away it goes. All right, all right. We're up 175. Look at it go! Look at it go! Look at it go! It's going to hit our order. Boom, boom, boom. There we go. That was on a break above the previous high. Now watch it go to the moon and leave us behind. We can always get back in. We can always get back in. Let's wait for it to pull back to stab those little yellow dots like it likes to do. And there's a low right there. So that's a little pullback right there. Sometimes I like to get in on those. Nope, not that time. Flush, flush, flush. Wait, that's a big move right there. That flushed down hard. Is it going to come all the way back down to that 50 moving average? Or is he going to turn around and go back up? We got 5 minutes till the bell closes, till the market's closed. We could put in our trailing stop. We could intercept. Watch this. This is one we haven't used very much. We wanted to show you that one. So that was the intercept. As it crossed those yellow dots, we got in with both. We put our stop back. In this case, we put them back at 10. So it needs to either break out or bail out. Well, we bailed out. Let's try again. We'll put it in there one more time. Drop it in here. Should you do this? No, you should not do this. Unless you want to. I'm not telling you you should do a trade like this. I'm telling you this is what the tools do. If you want to trade like this, go ahead. If you don't do it. Uh-oh. That one, something got screwed up there. We got a nice little trend line right in here. Look at that. Bang, bang, bang. Trying to break above that again. Don't trade like me. I'm in a demo account. I'm goofing off. Obviously, this is going through an accumulation stage, or actually it's a distribution stage right now, because we're at the end of the market. The market's not going anywhere. We're not going to catch any trend. The only thing we should be doing is, if anything at all, scalping, but we shouldn't be trading at all. Shouldn't be trading at all. I would advocate never trade. Don't ever trade. Don't ever trade. Just don't do it. Never, never, never trade. There, now's that guy in the comment section happy? Never trade. Don't ever do what I do. Sure be nice to catch a nice little runner right here in the end, but it doesn't look like it's going to happen. Looks like all the market wants to do is just yank our chain. This is the trailing stop one. This is the one that I had intercept. This was the YouTube ATR scalp and trail. And it's just trailing the crossover the yellow dots. Sometimes you guys know as well as I do that the market really respects those little yellow dots. The market really moves nicely and it goes through those yellow dots like a train on rails. And if the market's doing that, this strategy will really kick some booty, all right? But when it's not doing that and it's not respecting those yellow dots and it's got lots of topping tails, lots of bottoming tails, don't use these strategies because they'll get your hiney handed to you. But when they're really respecting it, that's the time that you want to trade these strategies. That's what they're designed for. That's why they've been created, so that you can trade them on those particular time frames. You got the biggest part, and I'll say it again. I always say it. I say it every day. I say it on every video. Teaching you how to use the tools is easy. I can show you what an iron condor is. I can show you what a butterfly is. I can show you what a scalping tool is, a scalp and trail strategy are. That's the easy part. The hard part is knowing when to put those things on. And I can tell you my experience of when to put them on and when I think the best time to put these things on and off, not to trade or when to trade. But you're going to have a lot of butt in the seat time. You're going to have to become a pilot yourself. I can tell you from my pilot experiences, but that doesn't mean you're going to be a pilot just because I can tell you pilot controls are like this, push the yoke forward, pull it back, makes you go up. But until you actually sit down and do it yourself and realize and learn how to do that yourself, you're never going to be a pilot. You got to go do it yourself. I can show you how to be a pilot. I'm your pilot instructor. All right. I'm an instructor. That's what I am. I'm just showing you how these tools work. I'm showing you how the tools work so that you can go be a pilot. Okay. So, but you got to have some butt in the seat time. You got to push the mouse buttons a lot, just like I'm doing here. Find out what works. Find out what doesn't work. Oh, I crashed the plane today. Well, when you fly Microsoft Flight Simulator to learn how to fly, you crash the plane a lot. It's a good thing you crash it in the simulator and not in the real, when you're in a real flight with passengers on board, right? Same thing here. This is a trade simulator, so you can crash a lot. And we're practicing in a trade simulator so we can learn. That's why we're here. So you got to go push those buttons a lot. A lot of people are afraid to crash in the simulator. I don't want you to be afraid to crash in the simulator, because the more you crash in the simulator, the more you learn. I want you to crash in the simulator so that you don't crash in the real money account. But don't feel bad if you're losing money in the simulator. You're practicing, you're learning things, change things up, make things better. You can't make things better, and you can't tweak your tools. You can't tweak your indicators if you're not practicing and pulling those triggers a lot. You got to practice a lot. And if you lose money, it doesn't matter. We give you more. Just call the boys at the office who have the software. They'll give you more money. And that's what it's designed for. They do it every day with hundreds of people. They don't laugh at you if you call in and ask for more money. They don't, Lan lost his demo account again. Let's put a mark on the board for him. No, don't feel embarrassed. That's not the way it works. We don't care. They don't care. They don't even think twice about it. They just give you more money because that's what they want you to do. All right? They want you to practice. See how the market works. See how the tools work. Oh, this is just a little bit too fast for me on range bar 15. All right, go to something else. Go try a different one. But then you're going to have to adjust your tools. You're going to have to make things have a little bit bigger to limit, a little bit bigger stop, all kinds of stuff. So that's what it's for. Practice, practice, practice. All right, guys, let's come and say hello to a few people. So there's Bruce saying hello. Bruce comes in with the gold medal this morning. First thing, Jay comes in, second place with the silver. Then we have Ashley Lee. Ashley, great to see you in class. What is going on Amazon? We're going to check with the stock market tomorrow. Tomorrow morning, 7:25 a.m., we're going to do stocks. All right, so Ashley, come back for that. In the afternoon, we do power hour, and we generally do a little bit of scalping and trail trading, and we try to see if we can't catch some trends out here in the power hour in the afternoons. On Tuesdays and Thursdays is power hour. Monday, Wednesdays, and Fridays is when we do morning session, and I'm going to try and focus a little bit more on the stock market in the morning, a little bit more on scalping and trailing and doing some of this stuff out here in the afternoon. So Ashley, we'll look at Amazon just for you tomorrow morning, 7:25 a.m. All right, we'll look at Amazon. I promised my class at the university we were going to do that too. So we'll be doing a little bit of that tomorrow. We got Kirk coming in saying hello. It's great to see you, Kirk. We got Lowdown Killer in the house. Great to see you, Lowdown Killer. Glad to have you. Bruce is in there. Audio is good today. Kirk's saying the audio is muffled. Kirk, is yours is still muffled? Says it may be something weird. He's rebooted. I don't know. Maybe I need to reboot. All right, guys, I got a Sunday school lesson for you. Let me come in here real quick with our Sunday school lesson. Don't reverse trade. All right. If you get stopped out, that's not a reason to reverse your position and go the other direction. Wait for a clean new setup, trigger before trying to enter again. Don't over trade. All right. Many of you have seen this Sunday school lesson, but I want to reiterate it again based on the comments I got in the forum again. But just remember, we're doing demo account trading here to figure out the tools and what the right settings are, whether range bar 15 is too fast for us or whether we want to be on a different one. And then we have to make adjustments to the settings. That's what we're here for. We're to learn. All right. But when you're trading, don't reverse trade. Don't, just because the market doesn't go up doesn't mean it's now time to go down. So wait for good setups. Read your charts, read your indicators, look at your recurring price patterns, do your count, measure, setup, trigger, follow through, make sure you're using your Fibonacci rulers, look for projections, do all that kind of stuff before you start putting your orders in. All right? I'm not advocating the way I traded today is the way you're supposed to trade. We were just testing the tools. All right. If you had fun, like and subscribe. Give me that little thumbs up. That's always good. I like to have the thumbs up. That helps me know I'm doing the right thing. There's always somebody gives me a thumbs down. That's okay. Give me the thumbs down, but tell me in the message why you gave me a thumbs down. All right? And I'll try to justify it tomorrow in class. All right. Thumbs ups are always good. Subscribe so you get notified when you come here. Make sure you hit the little bell so it'll send you a notice so you know when we go live. Again, Monday, Wednesday, and Friday, we're in the mornings. Tuesdays and Thursdays, we're in the afternoon and power hour. All right, guys, we will see you tomorrow morning.